India is ranked the fifth most vulnerable nation to the impact of climate change, with 2.5 to 4.5% of its GDP at risk annually. However, climate related investments from both public and private sources remain limited. An upcoming study by CPI finds that India is mobilizing less than 25% of the investment needed to reach this target. To put it in perspective, India roughly needs three times the total investment made in the infrastructure sector in the last decade to fight climate change for this decade. Crises often present us with opportunities to rebuild a better world. If anything, the disruption brought about by COVID-19 has further highlighted why sustainable practices must be at the core of both financial and economic thinking. The pandemic is reshaping the world, and as countries look to rebuild economies, corporates must be encouraged to place sustainability at the heart of their investment for transformation and avoid the pitfalls of a business as usual high carbon path.
COVID-19 has brought into sharp focus the urgent need to make economies more resilient. In the case of India, which was already reeling under economic slowdown, the pandemic has further exacerbated the structural fault lines of our growth pathway. A study conducted by Stanford University, for instance, has estimated that global warming caused the Indian economy to be 31% smaller than it would otherwise have been, and therefore climate change is no longer something that we can afford to ignore. It has in fact emerged as one of the most formidable challenges to sustained GDP growth across the world. And to accelerate the implementation of India's commitments to Sustainable Development Goals and Paris Agreement, finance is going to play a key role. Now, various estimates suggest that India requires about $2.5 trillion to meet its climate action changes between 2015 and 2030 under the Paris Agreement. And similarly, the financing gap to achieve sustainable development goals in developing countries is estimated at anywhere between $2.5 to $3 trillion, which means that every year India requires at least $170 billion to finance its actions to tackle climate change. But right now, the total annual green investments has only been about $19 billion on average. For instance, a report by Climate Policy Initiative said that green finance flows in India have totaled about 1.11 lakh crores in FY17, which is about $17 billion, and then about $19 billion in FY18. So you can see the large gap there. So yes, domestic private investors have been contributing. They've been the largest contributors in both of these years. But the report also noted that the Indian government's initiatives, including expenditure undertaken by dedicated public sector undertakings on climate-related mitigation activities, has also more than doubled between these years, and the budgetary allocation has also increased by as much as 36%. Now, the last economic survey also interestingly noted that India is now the second largest emerging green bond market after China, and it recorded $10.3 billion worth of transactions in the first half of 2019. But despite all of this, scarce financial resources continue to be a constraint in meeting India's commitments under the 2030 Sustainable Development Goals and the Paris Agreement. Now, experts also are now worrying that the economic fallout of COVID-19 could perhaps influence climate action as well, where a resource-constrained government may deprioritize climate change mitigation at a time when risks from global warming are actually getting more pronounced. But the opportunity also remains very large. For instance, the International Finance Corporation, they estimate that climate finance is a $3.1 trillion opportunity in India alone, and therefore we must align our growth and recovery goals with greening and sustainability.
Hello and welcome to The Making with me, Shereen Bhan, a special show that speaks to business leaders from across sectors to understand how this journey of transformation was brought about, the challenges around it, and the heartwarming and encouraging human stories that add life to all aspects around an organization's massive remake in the post-COVID-19 reality. With me today, I have Rajat Verma, the Managing Director and Head Commercial Banking at HSBC India, and it's also my pleasure to invite Ashish Bhandari, the Managing Director and CEO of Thermax, for joining us on this very special series where we will talk about financing India's green future. Gentlemen, appreciate you joining us here on the program. Rajat, before we talk about sustainable financing, let me ask you about what the big changes have been when it comes to dealing with the COVID-19 pandemic from a people's perspective, from an operations perspective. This is as much an economic story as it is a human story. What have been the big changes that you've been able to bring about?
Well, I think the biggest change, of course, is that we challenged almost every assumption that we had prior to the pandemic. So how people work, how they communicate with each other, For example, work from home, which was probably anything in the range of 5 to 10%. Today, we're thinking of our Hong Kong office announced that we could have 4 out of 5 days work from home. Uh, the the other angles around COVID is that it's brought a lot more of thought into uh, you know sector thinking in the banking world. We started to think of how greater macroeconomic changes like COVID will impact specific sectors, which has been so you could sit in April and think of which are the sectors which are going to get impacted by COVID, and actually kind of draw out a map of who's going to do well and who's not going to do well. I think the other kind of big change is that it's brought a lot of reflection to banks as well. So, as part of that reflection, and I'm so glad that it kind of leads into the topic of today's discussion, is that it started financial institutions to start thinking more deeply about the environment and sustainable financing. So our group CEO as well spoke about it during the course of the pandemic, and I think if I remember, my memory serves me right, he started by saying that the pandemic has shaped or accelerated or catalyzed the thinking on sustainable finance, and we've kind of upped our aspirations on that very, very significantly. So despite all uh, you know the challenges and the health challenges and the family stories, etc., I think uh, I'm an optimist, so I'm taking that this will hopefully will lead us to a better world in more ways than we can imagine currently.
Well, we certainly hope that that is in fact the case. In fact, to your point that we've seen an acceleration towards sustainable financing. Here are some numbers and some food for thought. Top ESG funds, that's environmental, social, and governance focused funds, have added 27% in their assets under management in the first quarter of FY21. India's ESG funds have attracted $500 million during the lockdown, and of course. The hope is that this trend will continue. Ashish, thanks very much for joining us. Let me start by asking you, the infrastructure sector was a sector that was deeply impacted on account of the COVID-19 pandemic. It's had its legacy trouble, of course, to deal with as well. Given where things currently stand, where are we in the course of recovery? Are you, for instance, getting back on a plane anytime soon?
First thing I would say, just like Rajat said, the past few months have first and foremost been a human story of all of our employees at Thermax finding a way to first manage ourselves with safety. And then once we had to get started, just the activity that was needed to get all our plants and our hundreds of sites up and running, working with customers was a miracle. And sometimes it brings out the best of India, the way we can put one and two together and find a way to just get moving again. So that was incredible for me to see. For, as you mentioned, the infrastructure sector in India has been through a slowdown, and it's not just because of COVID. You could take the last 7 or 8 years, and it's been a difficult story. I think for companies like Thermax, it is not a question of looking at infrastructure as a segment specifically, but start to retool our companies to be ready for where the world is going. And where the world is going is, and sustainability is a great example, is a move away from mega projects that are infrastructure related to a lot more of a distributed world, a smaller set of projects, lot more sustainability driven projects. So instead of having one mega refinery, you could have hundreds of small biomass based plants or bio CNG plants or waste to recovery plants, waste to energy recovery plants. And companies like Thermax, we have to retool how we look at the market to be able to gain from some of these changes and actually accelerate those changes by bringing funding, technology, everything that we have at our disposal, bring them together to make India better and then make Thermax better in the process as well.
That's a very interesting point that you bring up, Ashish. And before I talk about the financing aspect of it, let's talk about this retooling that you spoke of. While there is an awareness within Thermax on how you should prepare yourself for what you believe is likely to be a changed landscape, what are your clients telling you? I mean, one of the things that COVID has perhaps accelerated is this move towards a distributed workforce. You're saying that we're likely to move towards distributed manufacturing as well. We're likely to put much more focus on the ESG goals within organizations. What are clients telling you at this point in time? Are you starting to see that kind of reorientation being accelerated?
Very much so, Shereen. Even in these last 2 to 3 months, on the capital side, the projects that have all started and starting to get funded are 1 to 3 year payback projects. All of them have got some amount of green element. For us, for example, the biggest application that we have is waste heat recovery, where cement plants, steel plants use waste heat recovery to get additional energy within their plants. Yes, so customers are coming and saying, okay, this is a 1 to 3 year payback. It meets my sustainability goal as well. I'm ready to start this as the first capex that I want to get started on. As I mentioned, I'm getting on a plane tomorrow to visit our plants in Gujarat. And one of the customers I will be meeting is somebody who's looking at recycling non-recyclable waste and starting to say, okay, how do I get energy out of it? So wet paper, plastics, things that were considered untouchables a few years ago, technology is finding ways to bring them back. But they are not gigantic plants. They're all very, very local, very distributed, but extremely interesting projects from a Thermax perspective.
Well, it's good to hear that capex is picking up, and if green capex is going to actually be at the forefront of driving this capex recovery, then that's double good news. But let me get Rajat back into the conversation. Rajat, just to pick up on the financing aspect that Ashish spoke of, and we have seen financing picking up, whether it's in India or globally, not to the tune of what is our requirement or what is the need, but nevertheless, a start has been made. One of the concerns or a challenge really for ESG investing was the lack of a benchmark, the lack of a metric, and there was confusion on classification. With what now has been put forward by the World Economic Forum and the global Big Four in terms of drawing out the stakeholder capitalism metrics, do you believe that that will now further enhance the move towards sustainable financing?
No, absolutely. That Shireen, was fundamental because as you get more ESG funds and you get investors and companies more and more engaged in trying to help these goals, you have to be able to identify and distribute paper of this kind. So in fact, I think even HSBC has played quite an important role in this. So there's something called FAST Infra. It's an acronym for Finance to Accelerate the Sustainability Transition for Infrastructure. Essentially, it's we've tied up with the World Bank, with IFC, and with the Climate Policy Initiative, and the basic hypothesis is, as you mentioned, Shireen, is that the amount of investment required in renewable energy and in sustainability goals is a very humongous investment, which possibly cannot be met only by public means, and therefore you need to have more private investment coming into the future. And as a first step to that, to answer your question specifically, is that you have to be able to tag correctly green loans, green bonds, sustainable financing, and to be able to create a more liquid market and to bring financing of this nature into the mainstream. So this forum and several others that you've mentioned, I think the goal is really to have this kind of transparency and benchmarking and tagging of such initiatives. And my own understanding of this situation is that we've moved a massive there's been a massive change in what it is today than what it was, say, a year and a half or 2 years back.
Mm-hmm.
So yeah, it's quite encouraging.
It certainly is encouraging. But Ashish, let me ask you about what you believe it will take to actually deepen the financing market. I mean, we're talking about green bonds, we're talking about green REITs, for instance, and I would imagine that we will see, a fair amount of innovation when it comes to financial products. The EU green bond is something that people are looking at as well. There's the whole aspect of transition finance. How do you believe? Specifically from an India point of view, where sustainability is one aspect, but for infrastructure, the big challenge has been viability of infrastructure projects. How do you marry the two?
Shereen, very good question. Firstly, I would say that I'm quite encouraged even on some of the steps India is taking. As an example, the MCA reporting standards for next year will require the top 1,000 companies of India to start putting out a sustainability report, which could in the future become a template for how companies get ranked on the sustainability index and then get financing tied up to relating to your score on that sustainability index as well. In terms of how do you get the sector moving, there are two or three uh, templates and some benchmarks that I can think of. And all of these templates ultimately require this virtuous cycle of technology, of public policy, and financing to come together. So you need all three of these to come together to get some of these sectors moving. Just one by itself may not be sufficient. I was in the US when the 2007, 2009 financial crash had happened. And right after that, there was a fund that was created as part of the economic recovery. I think it was called the ARRA fund, as part of which $90 billion was set aside by the government for clean tech and clean projects. A few of them failed, many of them succeeded, but I understand that the end result of that was that the project created 1 million years worth of jobs in the US, including funding Tesla and a lot of other examples. EU is doing something similar as after the COVID crash. So the crisis is something to take advantage of, because how the government funds recovery, what areas it looks to focus on, can drive what the future will look like. And in that sense, some of the funding through MNRE, some of the priority sectors that the government have set aside can get benchmarked to renewables, to some of the sustainability driven sectors as well, which will then start infrastructure spend that is related to these industries. I think technology in what will be needed for India in many cases will be India specific. Yeah, I talked about agro waste, solid fuel waste, even hydrogen economies, EV. The challenges India will be very, very unique. So I think the solutions that India will have to develop will also be unique. And as I said, I think Rajat will have a lot more inputs into how the finance part of it will come together. But I'm very clear that the technology and the public policy have to be the other two legs of that tripod stool that has to come together.
Oh, you're absolutely correct, and I like the fact that you've given the tripod stool analogy, because we will need to have all three pillars working together for us to be able to make this a success. Rajat, technology will have to ensure that these are products or services that are affordable, that they're accessible in the Indian context. When we talk about electric vehicles, for instance, the Indian government, and from a central point of view, and many state governments are also looking at how they can bring down the cost of battery manufacturing, because that's really a large chunk of the cost. So on the product side, on the regulatory side, there is an effort being made. But let's talk about on the financing side. What do you see as the exciting opportunities on the financing side? And secondly, currently we're living in an environment where there's easy money, with central banks basically ensuring that the accommodative monetary stance keeps the money free flowing. But if that were to change, and it's not likely to happen anytime soon, but once things do change, do you believe that we are then going to struggle to find the kind of money that's currently coming towards the ESG side?
Great question, Shane. Let me start with the second part of your question first. I think every sector and every business proposition needs to first and foremost stand up on a commercial basis. Whatever enables that commercial basis is a secondary question. So it could be government policy, In the case of renewable energy, it could be the behavior of the off-takers. It could be the amount of equity flowing in, or the there's so many policy angles to it. But I think first and foremost, we have to make sure that there is a commercial and business angle. Only then will the scalability of this segment be ensured, irrespective of all the good intentions that all of us may have. So I feel that uh, the the pandemic and the availability of liquidity that all the sovereign governments have put into their respective markets is a good time for people to think about raising and becoming stronger, and use that flexibility that the market kind of gives them, and use this window of time perhaps to become more resilient. But having said that, ultimately it's the business models and the sustainability of that business model which will determine how much of capital is going to be available and will flow in to the sector. Now, if I can step back, Shireen, and talk about use a word which is also linked, unfortunately, to the pandemic, exponential, right? So it's an unfortunate word in today's time, but it's very true for renewable energy. And you spoke about um, we made a start in financing, etc. There were no green bonds 3 or 4 years back, or very few. We ourselves have assisted in close to 6 billion of green bonds from India, and you can see that it's an exponential curve. The amount of renewable energy installation in the country today is 90 gigawatts. It's going to go to 450 perhaps by 2030. You can see that that too is an exponential curve. Just purely by the stint of by the law of numbers. So really, I think so when Ashish spoke about the tripod and all of the three things meshing, I think that is absolutely fundamental for India to get right, and I think we are getting it right. So you can't have financing succeed if government policy or off-taker behavior is not what it needs to be for this industry to scale up. And but once you have those in place, and once you have the technology in place, which was, I think, the second part of Ashish's tripod, I think then there is no real economic reason that this won't succeed. So the real point that I'm trying to make is that I think this is a commercially viable proposition for a bank and for an ESG investor and a fund, as I see technology, how the cost of delivering many of these things have dramatically reduced. So it's financially viable, and that's the reason I think it'll succeed. And all of the other things are kind of following on from that. So I actually feel that many of the building blocks on financing have been put in place, like the tagging you mentioned, but like the ESG funds who are coming in more, like the statements that banks like us and other banks are making. So I think the statements are being made now with much greater confidence, not only because we want to do these things, perhaps we always wanted to do these things, but that today that it looks like a really reasonable commercial proposition in the next decade.
Absolutely, the shift from not just being a good thing to do but being the smart business thing to do, I think that is an important shift that has been made, and hopefully will continue to be made. But Ashish, I want to go back to your tripod analogy. Oftentimes what we see happen is that there are different regulations driven by regulatory bodies and different regulatory agencies, different policy makers, and many of the aspects that business needs to ensure viability and commercial success gets lost in translation. Now, how do you ensure that you do have alignment, a greater degree of alignment? Let's take the solar example, for instance. We've seen a flood of investors coming on. We've seen massive or exponential, to use Rajat's phrase, exponential growth as far as the industry is concerned. One of the key concerns has been tariff, and that has led to whether, like thermal, we're going to head down the NPA cycle in this business as well at some point in time. So to just use that as an example to talk about the greater alignment that's required between regulation, policy, finance, and of course, industry. What is it that you believe should be the mechanism going forward?
Okay, and Shereen, thank you. Then solar is a good example. And I would say it is a good example first because it's a success. If we take the last 10 years, this last decade, solar has been the place where an entire industry has become viable because of policy, not just in India, but across the world. Yeah, and solar maybe in the 2009, 2010 period was 5 to 6 times more expensive on a per megawatt basis. And when there was initial support from a public policy perspective by giving solar preferential rates, there was quite a bit of debate around, is this the right thing to do? Why should government be playing God in certain industries, etc.? But time has shown that intervention was a very good thing to do. Now you run the risk of taking that intervention too far by starting to expect that prices have to continue to come down and not letting the market decide what's a reasonable amount. By that same token, I think some of our companies have to learn from what happened in thermal energy and not be the first ones to jump over each other and get to the bottom of the pit from which coming out will be very, very difficult. Yeah, so I don't think in this case the government alone is to blame. There is quite a bit that the companies can do well as well in terms of managing cash effectively and showing prudence in the kinds of projects we undertake and we bid on. But again, I think the only thing companies will expect from the government is consistency of policy, which means once a project is agreed upon, a shake hand has happened on a particular price point, to go back 2 years later and to try and renegotiate some of what was done in the past, that is where things become a concern. And I'll share a couple of other segments where a similar potential opportunity exists for India. Here we all know that India needs natural gas in a very, very big way. Most of it gets imported, but biofuels is a great, great way. And we have ministers talking about bamboo-based fuels. We also have a tremendous amount of agro waste, specifically rice straw, wheat straw, which is causing significant amount of pollution in the north of India. We have an opportunity to convert a lot of that waste into bio-CNG. And the MNRE is starting to provide incentives for projects to make this happen, which means the MNRE is coming in and saying, I will provide as much as 4 crores to 10 crores of funding for a plant of a particular size. And this is something that can actually make projects viable, by which you can think about executing thousands of plants, which can then cut down pollution that happens in the north to a significant degree. So this is a very virtuous cycle which is ready to happen. Technology is coming into play. There are a lot of India-based specific technology companies, including Thermax, that is very excited about this sector. What we now need to make sure that the government doesn't change its policy. Tomorrow does not take some of those fundings away, or the government's given a floor for CNG, bio-CNG, which is there. That floor should not be taken away. As long as that sector stays, I think technology will come into play, and then we would love for HSBC and other companies to give us preferential financing for some of these projects. Yeah, because ESG cannot mean that we will fund ESG with corporate risk, which means if you are low on the corporate risk radar, there is a high probability that you are doing a good job of ESG as well, which means you would have gotten those funds anyway. So if you really have to make ESG work, you have to give some incentive to companies such as Thermax.
You know what? I think that's a negotiation that just happened.
Yes, and I'm going to take that negotiation further on the program live here. So Rajat, the question that I think Ashish is asking very specifically is that what kind of risk appetite do you guys have, and are you willing to write the big checks and take on some of the risks?
No, I think Ashish made 2 points. One was on the kind of economics or the pricing, and the other was around, I think, Shereen, your point is around the availability of credit. At a macro level, your point about availability of credit is a significantly more important issue, because ultimately the issue between now and the next 10 years is going to be the availability of capital. I think technology is already developing. The government has brought in, my personal view is that the government infrastructure through the MNRE, through SECI, and through uh, so many government institutions, PSU banks, private banks raising green bonds, etc. You could think of it as a glass half full, but I'd rather like to think of this as a massive intent of the government, which to my mind is irreversible, because you have institutional mechanisms now in place. And now with the PLI scheme for, say, more sectors being added. And if you think about the sectors, one of them is solar PV, and then of course you have batteries, etc. as well, which is sustainability goals. I think the policy place is quite strong. Availability of capital is a real challenge, and it's the real work in progress. So all the steps that we spoke about tagging, about getting more ESG funds, about banks stepping forth and having risk appetite is absolutely fundamental. And look, it's a journey for us as well. Let's not, we are not, I'd be the first one to admit that there's a lot of a lot of hoops that we need to learn and understand and then pass through this. But our appetite has significantly improved and changed, and the tone comes right from the top. So when we said
Okay.
initially our goal was to have support of $100 billion, I think by 2025, now we're saying $1 trillion by 2030, between
Hmm.
750 billion to $1 trillion. Now, people like myself and other countries across the world are saying, okay, what is it that we need to do to help contribute to this $1 trillion? Just green bonds is not going to do it, right? So I think there's certain lessons learned. The fact that you have a central body now off taking for a large number of the large projects, isn't that proof that the issue is recognized and is trying to be addressed? The fact that priority sector now, small projects are not necessarily receiving the finance which perhaps the SECI project might receive, is recognition that the RBI has made it PSL qualifiable. So what should I say on this? I think there needs to be an extension of this. It's a little bit like a rubber band. You got to keep extending the boundaries of this if you have got to meet the goals, because the goals are very, very big.
The goals are certainly very ambitious, but perhaps that's the need of the hour, given the opportunity as well as the risks that present themselves. But Ashish, let me give you the final say, and I'll go back to picking up on one of the phrases that you used. You said that the government tried to play God, specifically in the context of promoting solar, and that perhaps is what is needed, is for the government to actually try and drive that change and ensure that there is a conducive policy environment and facilitate that change. So do you believe that between government and investors, who are probably also going to try and wield the stick, we will see greener, smarter manufacturing?
Shireen, to that, I think the unequivocal answer is yes. It is not an option that we have. It is, and for India, where we need significantly more energy, that bit is clear. We also need that energy to be sustainable. And it's not, we are not looking 20, 30 years down the future. For many of us, and I lived 9 years of, until 6 months ago in Gurgaon, and we saw the weather change in front of us in the last 4 to 5 years alone. And with each year, it was getting worse. And we saw when, during the initial months of COVID, when everything was shut down, how the air suddenly was better to breathe and all of that. So the problem is not a first world problem. It is not something that we are doing for 3 generations down. It's a here and now problem.
Yeah.
So for India to manage both energy availability and energy sustainability, both have to be done. And for companies like Thermax that can be on this bridge of energy transition and play a very strong role in making both energy available and sustainable, is the opportunity that will define us for the next 10, 20 years, for sure.
Absolutely, we cannot wait for a pandemic or for a shutdown or a lockdown to improve our air quality standards. That certainly is not the option that we should be banking on. But Ashish, Rajat, many thanks for joining us here on this very special conversation. I think there's plenty of food for thought, and we do hope that we can continue to build on this dialogue and this discussion and nudge policymakers, industry in that direction. But thank you very much for your insights on the program. Well, it's good to go green, but it also involves investment and extensive transformation in how we do business in India. With that, it is time for us to wrap up this special edition. Over the next few weeks on The Making, we will put the spotlight on crucial decisions that leaders will need to take to ensure that their organizations not only stabilize, but also are ready for recovery. We'll talk about Indian MSMEs, the need to go global, the reshaping of global supply chains in a post-COVID era, and much more. For now, from all of us here, goodbye. Many thanks for watching.